festive season, really the best time of the year for so many of us, isn't it? Well, let me start by wishing all of our viewers a very, very happy Diwali. I really hope this new Samvat is filled with hope, health and happiness for all of us. Well, I am here at a very interesting location at the Bhima Jewellers showroom at Koramangala in Bengaluru. I'm here for another episode of Financial Quotient, the CNBC TV 18 series about women and money. Well, as I was looking at this fabulous, beautiful jewelry all around here, I couldn't help but ask myself the question, how should we view this precious yellow metal called gold? Is it just a thing of beauty, just an item of adornment? Is it a store of value? Or is it something that really should have a permanent place in our investment portfolios? Well, to help us answer all of these questions today, I have a special guest with me, Deepak Shenoy, CEO of Capital Mind. Deepak, what a pleasure to be here in your own city.
Thank you so much, Shurvi, and welcome, and a happy Diwali to you and all your viewers as well.
I wish you a very happy Diwali as well. It's a great time to be here, and thank you for being a sport. I absolutely love your look.
Thank you so much. The least I could do, I guess.
I have lots of questions. I want to ask you about whether you buy jewelry, whether people in your house buy jewelry, and more importantly, gold and investing. So lots to discuss. Let's go?
Absolutely.
Okay, after you. So Deepak, once again, thank you so much for taking out the time and joining us to do something different. Okay, the subject today is actually not stocks per se, but as I said, it's more about gold and in general, the need to diversify also away from equities. What are your thoughts on this, first of all?
This is actually an interesting point. I think equities diversification goes mostly into debt, in my opinion, because they're like a relatively different asset class. Gold tends to be this asset class that people like as a whole, because they like if everything goes down, we'll at least have the gold. It's like an insurance against inflation and all of that stuff. But in my view, and I may be wrong in that, I think you should look at gold slightly differently. It's like buying a Porsche or an expensive car, or a Porsche, and then when you buy one of those cars, you're going to enjoy driving it. And you're not going to think of it as, oh, when I sell it, somebody will pay me more than what I bought for it. But
it's for immediate fulfillment and enjoyment.
And gold can be that, right? Like if you look at the store here, it's, extremely interesting things, and people like to wear them, and people feel empowered wearing them. And I'm talking both men and women. I think you should do that. Now, as an investment, and this is now where finance people get so boring, right? So, mat karo types for an investment is what I would say. But do it for the pleasure of owning it. And I would say this for anything, including property. So I have this view that you should buy these things for enjoyment, but you shouldn't buy it for an investment, because while you might find those pockets of times when gold has done ridiculously well, or so has property, I think on a long-term basis, and we'll come to, maybe I'll give you those numbers, it changes perspective, saying, oh, gold does not do so much better than equity, or anywhere sometimes close to equity. To give you an example, in the last 10 years, 2011, the gold price was about $2,000 per troy ounce in the US. It's still about $2,000 per troy ounce.
In terms of the dollar price?
Dollar price.
It's close to 2,000.
The rupee price has increased because of two reasons. India, after 2011, imposed 12%, now it's 15% import duty on gold. So that increases the price of gold locally. So domestically your price goes up. The second one is that inflation relatively in the US has been much lower than India. So the difference between the inflations in both countries means the rupee depreciates over time. The rupee depreciation over time is about 4%. It has been about 4% for the last 10 years, maybe 3% for the last 10 years. And that 3% per year for 10 years is what has caused the gold price in rupees also to go up by about 30, 35, 40%. Going forward, I feel that the inflation differential between the two countries is likely to be lower. US is at 4%, India is at say 5.5%. So the differential is really small. You can see that right now. For instance, if I want to buy the dollar 1 year ahead, I always have to pay 6% more. for a 1 year ahead
because the rupee typically depreciates against the dollar. I mean, that's what we've seen like in our lifetime.
In our lifetimes.
Yeah.
But right now, to buy the dollar 1 year ahead is only 2%. That means you're only paying a 2% premium for a 1 year's exposure. They're expecting this inflation differential to be really small. So if you buy gold in rupee terms today, you don't get the benefit of this 15% tax becoming 30% tax, for instance. I don't think India will impose a 30% import duty on gold. But at the same time, I don't think the inflation differential, right? So you don't get the rupee depreciation and the tax angle which you got in the last 10 years.
Okay, you're saying that the reason why the Indian rupee price of gold typically rises more than the dollar price of the international price of gold is because of two reasons. One, because we import gold and there's a tax, and the tax obviously increases the value. And the second you're saying is the currency. The fact that the rupee has been in the past depreciating versus the dollar.
That's correct.
What's the view? What do you think about gold, let's say 5, 6, 7 years, both in terms of the USD international price and the Indian price? How do you see it?
There's two aspects to this. Of course, if you don't get the taxes, you don't get the rupee depreciation, will something else come in and change the price of gold? It can be high demand. Unfortunately, demand is very complex. Demand in the world of gold itself has gone up largely from central banks buying gold, not by retail individuals buying gold. So in that context, things have changed. Secondly, as economies become more financial, governments become more trustworthy sources of saving. So you want to save 5 lakh rupees in a bank account today, it is completely guaranteed by the government. You're happy to do that. Earlier you were like, listen, no, I'll put all my savings in gold, in real estate and all that stuff. So as the economy financializes, people anyway move more savings out of incremental
physical
savings.
Assets, yeah.
To physical assets, from physical assets to financial assets. Yeah. So that is the reason why I think the demand for gold, at least from countries like India and China, is going to be lesser. India and China, by the way, are the biggest consumers of gold.
Yeah, but you're saying lesser demand from these two giants.
So I think from an investment perspective, just looking at the macro situation, I don't believe this is a great investment. Other than if you strongly believe there's going to be a situation where the world is in turmoil, but not in too much turmoil.
Geopolitics, wars.
Yes.
And we have that situation right now.
So, but turmoil, but not too much turmoil, which means that somebody else is having problems, but not you.
Okay.
Because I'll be honest, if you're in one of the geopolitically affected areas today, that gold is not much of help. You need to be out of that area, or you need to have protection for yourself to protect other people, you from other people stealing that gold.
And you can't even transact that gold while you are in a war-torn sort of zone.
And unfortunately, and this is where life turns a twister, right? When you try to transact in the gold, when you are in distress, the environment takes a lot of what's toll. For instance, today if I invest in a mutual fund, if I sell, there is a small cost, maybe an STT or a transaction cost, but that's it. If you try to sell raw gold, there is a wastage making charge, etc., etc., etc. That takes away 5 to 10% of the value of the gold the minute you want to sell it. It is complicated to sell it because some jewelers will ask you for the purchase price, purchase invoice to ensure that it isn't stolen. Some people will say, well, this is not pure gold, and then I have no way to disprove them.
Because you don't have the receipt.
Or because I don't have the receipt. And then
gold lies in the house or in your lockers for like decades, and not everybody might be stolen.
And sadly, the only way to actually monetize your gold in that context is to take a loan against it. If it's 1,000 rupees worth of gold, I will get today in a bank, and banks have the leeway to give up to 90%, I think, of the value of the gold as a loan. So instead of paying the 10% making charge, you're getting 90% of the money upfront, and then you tell the bank, can you please sell the gold and recover your money because I haven't able to sell it. And so it's really unfortunate that ecosystem hasn't. So it's very easy to exchange gold. In the sense, you take one gold ornament and say, give me something else. I'll take a gold, necklace, and I'll get something else that's a pendant with something else and all that stuff. That's perfectly fine.
This is amazing because this series caters, specifically to women. Of course, we have male audiences watching, and there's a lot of input you can pick up from this conversation as well. But I think the women are going to be happy because you are an expert who's telling us that it's actually okay to go buy jewelry and be happy. But in terms of investing, you need to think of something else. I think
you confuse I think people should derive more happiness from the enjoyment of gold. And we feel a wicked lack. I mean, we're feeling of how can I be so ephemeral that I'm just, I just like to feel good wearing an ornament. I I like to feel good.
You want to
close.
justify in your head that, oh, this is also an investment.
It's also
it's okay to buy it.
Yes, I think you should go beyond that. I think there is no shame in enjoying yourself. You're going to only live so long. You should absolutely, if gold makes you feel good, it is worth any amount you pay for it. Because one day we're all going, and you're going to remember the happy moments, not the times when you said, I won't buy gold because, you know what, I have to save for my afterlife. So...
Okay, your point is well taken. I think I'm also convinced that if there's no shame and no harm in buying jewelry and rewarding yourself. But if you're thinking of investing, then physical gold is obviously not probably the best thing to look at. Having said that, now let me play the devil's advocate here in terms of gold in the investment portfolio. Given the diversity between these 2-3 asset classes, should you put some in your portfolio? And what do you think of these multi-asset funds? Yes, no, maybe?
Since we run a PMS, we obviously, a lot of customers ask us about gold as part of their portfolio. We don't do gold directly, but we do tell them that once you've decided to buy gold, now this may be because I want to buy gold in advance because my children are going to get married at some point. I want to, hedge the risk that the gold price will be much higher there.
Yeah.
So you could buy gold in many ways. Physical, most difficult to, because you need a locker, you need to...
Safety, storage, and redemption, like you explained.
And the complexities of it.
Yeah.
Then you could go one step higher and say, I'll buy a gold ETF or a gold mutual fund. Now, unfortunately, these funds charge roughly 2% or 1.5% to 2% per year, just as the storage cost and the cost of... Because they need to store.
Really? Even the ETF? I thought the ETF would have very little investment cost in the expense ratio.
Well, the expense ratio for gold ETFs is much higher. It's 1% off.
Okay.
And one of those reasons is because the storage of gold, the lockers that store this gold. And then there's a complexity here. Of course, mutual funds generally are very well regulated, but now today you get these little funds which just use these certificates and they say, oh, you can buy gold in these...
100 rupees of gold. Digital is a wonderful marketplace, and then we have a lot of platforms, I'm not naming any, where you can buy gold for 100 rupees, 1000 rupees.
So
what do you think of that?
This is where I find it a problem, because you see, the problem that happened in Bitcoin was that a certain big exchange like FTX went down because they said we have so much Bitcoin, but they actually didn't end up actually owning that much Bitcoin in the first place. But because people thought they had so much, it was all good. Now you're doing the same thing with gold. Now mutual funds are fine because they have a back-to-back.
Very highly regulated.
But these other platforms, you don't... I went to some of the websites of the places where they're supposed to be storing gold. They're supposed to give a certification roughly every quarter or less than a quarter, saying yes, we have physically verified that there is so much gold available.
In our vault.
And I was unable to find some of these. So I was a little concerned that, look, I don't want to say, you're saving this for your lifetime, and you don't want a situation where you think you've bought gold, but there's no gold underneath. And, so you should be careful of that.
Okay.
Then you go one step higher, and I think this is the best way to buy gold, is something called a sovereign gold bond.
Okay.
A sovereign gold bond is issued by the government of India.
Yes.
And they tell you, effectively, listen, you buy it from me at the price of gold today, and when it matures, which is 5 to 7 years later, I will pay you back the gold of value at that time. And you don't have any capital gains if you redeem it at the end. That means you don't sell it in the market in the middle. You can get the entire gold return without any capital gains.
Even if there has been capital gains during this 5-year period or 8-year, that's the tenure of these bonds,
right? 5 or 8. Interestingly, every single issue that has matured so far has been reasonably profitable, almost as much as equity.
As much as equity?
Because they also pay a 2.5% annual interest on it.
Right.
Which means you're not only getting the price of gold, you're getting another 2.5% on top. And interestingly, since they've issued these bonds, gold has only gone up again, partly because of the tax, rupee depreciation, but it has, with this 2.5%, given you close to equity level returns in the last 10 years. Now, it's a good thing for a financial instrument. I think the tax advantage and this 2.5% tips the game in favor of, if I'm buying gold, I should buy SGB.
Sovereign gold bond. When you redeem these bonds, you are given your money back, or is it a physical redemption of gold?
It's money back at this point. There are 3 other schemes: the gold monetization scheme and a gold coin scheme. There are 3 other schemes by the government. That is, if you have your gold,
have gold, then you can
give it away. They will melt it. Now the reason for that is if they are able to melt that gold and give it to jewelers, then we don't have to import that much gold. And you get a gold certificate from the government, which you can always redeem for actual gold, which will come in a coin form or something like that, at the time of redemption. You won't get your own jewelry back. So if you give your jewelry, you'll get gold equivalent back.
Got that. Ladies, so keep this in mind as you're looking at your wardrobe and your finances. Wardrobe, it's great to go buy gold. We have Deepak giving the green light for that. And when it's finances, then you have other options like mutual funds or maybe sovereign gold bonds. That's the one that has his vote. Deepak, finally, as we're coming to the end of the conversation, financial advice for women, young working women, students who are starting out, ladies, housewives in general. What is the mantra for women and money?
This is actually great. I think women need one step more than men, to be fair. I'll tell you why, because our society creates structures which require women to have some kind of independent interest. So I would just say keep that in mind. Always keep something that is yours personally and build up on it over time. So you'll build up for, you might as a family save for your retirement, for your kids' education and all that stuff. Save something also for yourself, not just for, because it kind of gets complicated sometimes, and just for the complex times, you want to be financially independent at a personal level at all times. So build yourself. There's a lot more money to be made in financial assets, equities, debt, international markets, which we have access to today thanks to the burgeoning Indian economy. And I think the more you save over a long term, the more you'll find avenues to spend this money at a later point when, it's time to spend it.
I think that's great advice, right? Look after your children, look after your spouse, look after your parents, but also look after yourself, save for yourself so you can enjoy the benefits of the fruits of your labor, really. Deepak, it has been an absolute pleasure. Thank you so much. And I look forward to maybe coming to Bengaluru more often and having more of these conversations.
The weather will be always exciting.
Thank you so much. Well, for now, I have to take a very quick break, but the conversation on gold continues. We're back with another guest in just a moment. Welcome back. You're with us on this episode of Financial Quotient. I have now with me Mr. Vishnu Bhatt, who is the Managing Director of Bhima Gold. Vishnu, thank you so much for taking out the time. And I must say thank you for hosting us, because it was absolutely fabulous to shoot at your jewelry store. So really appreciate it.
Yeah, the pleasure is all ours.
So, I thought I'll ask you, because you're in this business of gold jewelry, and South is such a huge gold market, right? You're present in several states in the South. So you tell us, what is your experience with the way women are sort of looking at gold jewelry, purchasing, spending? What have you seen over the years?
Right. So the thing is, traditionally it's been seen as heirloom purchases, and as of today, it's become more of a fashion statement. And it's also, according to me, jewelry is not something that you just buy for an investment purpose, but rather it's something that you do to enhance your personality. And it is something that gives you a certain, I would say that the design and the effort that goes into the making of a certain piece, and the metal itself gives you a certain energy and a certain vibration, which just makes you feel overall better and then hence more fashionable.
Okay, sure. So let me ask you, you think today we're in 2023, when it comes to the actual decision making of making that big jewelry purchase, is it the men who are doing the deciding, or do you think women have a bigger voice now in saying this is the budget, this is how much should be bought?
I would say that men are mostly, they do have a say, but not like perhaps compared to before, because obviously these days it's wherein before it used to be more focused towards the region and the particular festival where the jewelry is purchased for. These days all the festivals and functions, and people are moving around a lot, and so the taste in jewelry has become a lot more generic. And so it has gone more from an investment and an heirloom perspective to a fashion perspective. And hence women are almost 99% of the time deciding, what to purchase and what to, yeah.
Interesting. So that's a really interesting perspective, Vishnu. Let me ask you more. In terms of the age profile, do you see more younger women now coming to the stores? Do they have more spending power? Or has it been traditionally more about the mothers and the grandmothers? What do you see in terms of the women's age profile as they're coming and buying all this jewelry and gold?
So there is a couple of aspects to the question what you asked. The first aspect of it would be that, back in the day, there wasn't too many things that you could spend your money on. And so the default choice was for young women to buy jewelry, or for the mothers to buy jewelry for their daughters. But these days there are a lot more avenues, which they can spend their money on. And hence the onus is on the jewelry industry and people like us to show that jewelry is a much better investment, and in fact it suits the personality of a young woman much more than just a gadget.
Okay, very interesting. Speaking of investments, now that's what I want to understand. Gold, while of course it's a very important thing in terms of ornamentation, as you said, it makes one feel good. But what do you think of gold as an investment?
So the thing about gold as an investment is that I would say probably maybe people in the stock market are much better at marketing their products, and maybe we are not that good at it in highlighting the investment aspect of things. So certainly maybe we are trying to, through our marketing campaigns and all, teach people that jewelry is actually the investment, the safest investment to go for. And I would say that it is still a very safe investment, and it is not something that you need you don't need a computer or a device to convert it into a cash. You could walk into probably any place of the world, and then probably you'll be able to get a price for gold. So that's why I would say that from an investment perspective, it's pretty good. It still holds true.
Good you brought this up, because I wanted to understand, and who better than you to ask this. So in theory, we feel that it's great to own jewelry or gold, and we feel that you can walk into any jewelry store or any exchange where you can redeem it for cash in times of distress or in times of worry. But is it really that simple? What are the charges and the cuts which one should be aware of when you're going to redeem even physical gold, not jewelry, but even physical gold in exchange for cash?
So I would just like to give a small background for this. Bima Jewellers is a company that has existed for almost 100. We're going to be celebrating 100th anniversary next year. And so the thing is, we do have customers who have purchased maybe in the 1960s, and they came and exchanged the products with us at the current gold rate.
Oh wow!
Yeah. So definitely Bima will, definitely offer that service, wherein if you buy a product from Bima, gold, diamond or silver product from Bima, you can come back at any time and exchange it at the present market value, not at the rate you paid for it. At the present market value, gold, diamond or silver, a Bima customer will be able to exchange it at any of our stores, any of our 18 locations.
Okay. So what is the advice that you'd like to give to women, young women, any age women, when it comes to buying either jewelry or buying gold as an investment?
My advice would be, again, I would have two aspects to it. The first aspect of it would be, it's never going to lose its value. In fact, the value is only going to go up. And second, it's going to enhance the beauty and image of a woman better than any other thing that you could spend your money on, I would say.
Okay, so you are a believer in gold.
Absolutely.
Okay, Vishnu, thank you so much. That was great. Thank you for hosting us and having us here today.
Thank you. Thank you. Thanks for having me.
All right, well, that's a wrap on this episode of Financial Quotient. We'll see you again next week.